Welcome back to our channel. Now we are discussing on related party transactions and loan from directors. Is borrowing money from director is a related party transaction under the Companies Act 2013? This is a question. We will explore what is a related party under section 2, subsection 76 of Companies Act 2013. Whether borrowing falls under section 188 of Companies Act 2013. There is a difference. Transaction with related party under section 2, subsection 76, and related party transaction under section 188. Both are not same. Because all related party transactions under section 188 are transactions with related parties. But all the transactions with related parties defined under section 2, subsection 76 may or may not be related party transactions under section 188. So we'll also discuss the role and powers of the audit committee under section 177. We'll also discuss about the omnibus approval and post-transaction ratifications and reporting and compliance under deposit rules 2014. So we'll discuss in length. First, we'll understand the definition. Section 2, subsection 76 talks about the related party. Who is a related party? This is an inclusive definition. Related party includes any director or his relative. Director or his relatives. Any KMP, key managerial person, or his relative. Any firm or body corporate in which a director or relative is a partner or shareholder is a related party. And subsidiary, related party. Holding company, related party. Associate company, related party. And other investing companies, also related parties. So, director is always a related party. Director always a related party to the company. Now we will see section 188. This is a related party transaction. I already told you. Transaction with related party and related party transactions. There is a difference. Now we will see section 188. Related party transactions requiring board or members approval. Board approval, members approval as applicable. Now let's read section 188, subsection 1 carefully. It only mandates prior board or shareholder approval for contracts related to only certain transactions only. What are those transactions? As per section 188, subsection 1, sale of goods or purchase of goods, sale of property, acquisition of property, lease of property, availing services, rendering services, appointment to place of profit, underwriting, appointment of agent for sale or purchase of goods or services or property. These are all related party transactions. These are all the transactions covered under section 188. Now, loan or borrowing is not mentioned in section 188. Loans are not covered. Borrowing is not covered under section 188, subsection 1. So, it is not related party transaction under section 188. It might be a transaction with the related party. taking a loan from director is a transaction with the related party. Related party under section 2, subsection 76 as defined. But it is not a related party transaction under section 188. It is a transaction with a related party, but it is not a related party transaction under 188 because loans and borrowings not covered under section 188 subsection 1. Now we'll also see section 177, audit committee. 177 subsection 4, clause 4, approval powers, audit committees. Section requires audit committee to approve all transactions with related parties. Not only related party transactions, all transactions with related parties. Section 177 requires audit committee to approve all transactions with related parties, including those not covered under section 188. See, the key point here is section 177 covers all related party transactions, not just those mentioned in section 188, because transaction with related party is different from related party transactions under 188. So all related party transactions, so approval is required, audit committee approval is required under section 177. So even if a loan from director, which is not under section 188, still needs audit committee approval under section 177. Because the director is a related party, so that is why audit committee approval is required. We'll see even an example. Case law. Blue Star Limited borrowed 50 lakhs from its director. Company Secretary said not on RPT under section 188. So no approval is required. Because he said 188, it will not cover no loan from director not covered under 188. So approval is not required. No approval is required, he said. But auditor said, no, it is a related party. Director is a related party. Approval required under section 177. So answer is yes. Auditor said correct. 177. Under 177, approval is required. Audit committee approval is required. So even though borrowing is not covered under section 188, section 177 subsection 4 clause 4 still mandates audit committee approval. Now we'll talk about the omnibus approval, post facto approval, whether it is allowed. We'll go to rule A, rule 6A of the company's meetings of board and its power, rule 2014. Rule 6A of companies meetings of board and its powers, rules 2014. Omnibus approval for repetitive transactions. Omnibus approval for repeated transactions, repeated RPTs. If the transaction value is less than or equal to 1 crore. Conditions: unforeseen need, routine nature, same related party. So the omnibus approval is allowed for repetitive related party transactions. Value up to 1 CR. Conditions also I explained. This is for omnibus approval. What about post facto ratification? If a director or officer enters any related party transactions without prior approval, I just told prior approval is required. Here we are talking about without prior approval of the audit committee, then must ratify within 3 months. If not ratified, what happens? Transaction voidable at the audit committee's option. Suppose if there is any loss, then director has to indemnify. Such unappropriated transaction causes any loss. Unapproved, where audit committee not approved within 3 months. There is no prior approval also. Then if any loss caused to the company, then director has to indemnify any loss to the company, and the concerned director must indemnify the loss to the company. So director indemnification here is if such unapproved transaction causes any loss to the company, the concerned director must indemnify the company. So in the case which we discussed, the audit committee must now either ratify the borrowing within 3 months or declare transaction voidable. Is loan from director is a deposit? Is another question. We go to Rule 2, 1C, Clause 8 of the Company's Acceptance of Deposits Rule 2014. Loan from director is not considered as a deposit, exempted deposit. This is exempted deposit, provided the director furnishes a declaration that the money is not borrowed. Money is not borrowed funds, which he has given loan to the company, that is not borrowed, his own money. That declaration has to be given. Then such loans are categorized as exempted deposits. So for exempted deposit, if you are taking a loan from director, first there shall be a board resolution, director's declaration as funds are not borrowed, and also disclosure in the board's report and filing of form DPT3 under exempted deposits. DPT3 has to be filed under exempted deposits. This comes under exempted deposits. Loan from director comes under exempted deposits. And disclosure in financial statements in notes to account. We will talk about what about the loans from relative of directors. Loan from director we have discussed. Now we will discuss loan from relative of director. There is a key distinction between private company and public company. Private companies can accept loans from relatives. Loan from relatives of the director. If the money is not borrowed. So private companies can borrow loan from director relative. If the money is not borrowed, you will take the declaration. What about public companies? Public companies cannot accept such loans because that is not exempted deposit unless any is specifically permitted. So the compliance steps, even from loan from director relative, declaration has to be taken. DPT3 has to be filed under exempted deposit. Board's report, it has to be clearly mentioned. Even in financial statement, disclosure should be there. Now the question is, can a company pass borrowing resolution by circulation? No. Borrowing is a power under section 179(3), under section 179(3) of the Companies Act, which must be exercised in a board meeting only. So no circular resolution allowed for borrowing because section 179 subsection 3. Is there any borrowing limit for loan from directors? See, only section 181C we have to check whether total borrowing exceed paid up capital plus free reserves plus securities premium account, paid up capital plus free reserves plus securities premium. Whether the borrowing exceeds this amount, then the special resolution by shareholders is required. We have to take care of section 181C. Anyway, private companies, this section is exempted. This section does not apply to private companies as per MCA notification dated 5th June 2015. Still it is valid. So if the company miss audit committee approval, so what happens? Company has not taken audit committee approval. Just now I explained in example, if not ratified within 3 months, transaction becomes viable. There is if any loss, director need to indemnify the loss. Auditor will qualify audit report. Then regulatory non-compliance, especially in listed public companies. So we'll see the steps, step-by-step procedure to take loan from director. Board meeting for approving the loan and limits. Obtain a written declaration from the director not borrowed funds. Execute a loan agreement with clear terms. File Form DPP3 under exempted deposits. Make disclosure in the board's report. Disclosure in financial statements, notes to accounts. Obtain audit committee approval pre or post as applicable. Maintain proper records for regulatory audits. Here the key points. Director is a related party under section 2 subsection 76 of Companies Act 2013. Borrowing from director is not a related party transaction under section 188 subsection 1. This is a transaction with related party but not related party transaction under section 188. However, it is a related party transaction under section 177 and requires audit committee approval. All the transaction with related party. Transaction with related party, audit committee approval is required. Post facto ratification possible within 3 months. Director must indemnify the company if loss is incurred. Loans from director are exempted deposits, but need declaration and disclosure. Private companies get exemptions from section 180 borrowing limits. So you have to see whether private company or public company and exemptions of private companies. So finally, in conclusion, while borrowing from directors might not trigger section 188, still triggers compliance under section 177. Audit committee oversight is essential to maintain transparency and accountability, especially in public and listed companies. If you like this video, please subscribe. We have two channels, RR Corporates, other channel RR Legal Talks. Hit the bell icon so that you will not miss any of my latest updated videos. Thank you.